SVC Media.
Welcome to the iGaming Daily Podcast, analysing the news from the betting and gaming industry all over the globe, supported by Optimove, the #1 CRM marketing solution for the iGaming market.
Yesterday, Entain posted a positive Q3 trading statement in which the FTSE 100 gambling group has cited confidence in achieving the year one objectives of its corporate reorganisation. New CEO Gavin Issacs reaffirmed the view that Entain should be viewed as a highly attractive business with its brand in leading positions across key growth markets. Confidence was bolstered by Entain returning to online growth in its home market of the UK and Ireland and registering 48% NGR growth in Brazil ahead of the market's launch in 2025. Meanwhile, in the US, the BetMGM joint venture has stabilised its market share in iGaming at 22% and sports betting at 8% ahead of key product upgrades. Under a new leadership and corporate strategy, has Entain finally turned the corner on its former headwinds, returning the PLC back to profits and shareholder value? I'm Martyn Elliott, and welcome to today's edition of iGaming Daily, brought to you in partnership with Optimove, the #1 CRM marketing solution for the iGaming industry. Our friends at Optimove have announced some exciting news this week. They've signed a deal with Veikkaus, Finland's national lottery operator, which adds to an enviable client list that already includes the likes of Bet365, Kindred, Lottomatica and Entain. That's the very same Entain that I'm going to be discussing with Ted Menmuir, SBC's contact director, or even content director, and Conor Porter, senior journalist for CasinoBeats. Hi, Ted. How are you doing?
Good, Martin. Very well. Looking forward to the weekend, but closing out on Entain's Q3 update. So looking forward to this discussion.
Yeah, excellent. And hi, Conor. How are you? Going to say I'm making that sound like I haven't seen you for ages, but it's been all of about 12 hours. So.
Yeah, I'm doing good, Martin. Happy to be part of the Big Monday News team again on a Friday. So yeah, let's go, Big Monday News team on a Friday.
The rebooted Big Monday News team. Okay, great. I think we've probably talked about Entain more than anything else since we started iGaming Daily. We've talked about fines, shareholder revolts, Entain's leaving the Vatican City market. We've done all sorts of things on this. So this is one of the first times we've had maybe something positive to say, though. So, Conor, can you perhaps give a bit of a recap on this positive statement which we've had in from Entain? How did Q3 actually go for them?
Yeah, it went really well for Entain, according to their published results, ahead of expectations overall in Q3, is what they said, with the online net gaming revenue, NGR, rising by up to 10% year over year. So good on that aspect of online. A total group NGR, including its 50% of BetMGM in the US, up by 8% in comparison to the previous year, 10% in constant currency and 7% in constant currency on pro forma basis. So really good in that aspect. Back in the positives for them. It'll be good for them as well, with Gavin Issacs now in the CEO role from the beginning of September, moving forward throughout the rest of the year now. And approaching 2025, there's a bit more solid footing for Entain, shall we say, going forward. They've expressed as well that they've had good key growth in their core markets of the UK, US, and in Brazil as well. And overall, it's looking really positive for them. Gaming NGR is up for them by 6% year over year on a pro forma basis, as well as sports NGR by 5%, wagers in sports up by 3%. Online wise, it's the same kind of results. Gaming up by 9% NGR, sports NGR up by 8%. So there's a lot of positive trajectory going forward for them. Gavin said within the call itself that they're delivering on their strategic priorities. Already mentioned about their improving performance in their essential, what they've quoted as must-win markets of the US, UK, and Brazil. product and technology is good for them. On their roadmap remains on track. So yeah, overall, Martyn, really positive quarter for Entain in Q3, and it looks as though they've got a lot of optimism going forward into Q4 and the new year. But we'll be discussing that in more detail on this podcast today. Sure,
you used the word up quite a lot there, which I think investors and analysts always like to see from these statements.
It always goes well with investors when you use the term up in your results. Everything's improving, everything's increasing.
Yeah, that's right. I mean, one of the standout results really is in the UK and Ireland, where they've managed to grow the business a little bit. How have they managed to achieve that, Ted?
Okay, so in this area, you really have to tune into the investors' calls, and this was kind of underlined by CFO Rob Wood, who kind of detailed Entain's passage back to revenue growth in the UK and Ireland, which I think tracked at about 6 to 8%. He reflected that it had been a tough adjustment for Entain's UK portfolio since Q3 2023. In which its brands have taken significant regulatory adjustments. The UK unit has returned to pro forma growth since Q2 trading, in which Wood believes that regulatory drags are now behind its brand in its portfolio, and that its kind of catalogue of UK brands can now return to overdue growth. Also, what it's witnessed is kind of product enhancements across the portfolio, which will have a direct impact on NGR results moving forward. Again, one of the outstanding issues is it's retail that remains 2% behind on NGR, but its outlook is improved by new efficiencies and in-store upgrades that are expected to come into play from Q4 onwards. Overall, kind of maintaining painting a much brighter picture of its UK prospects. But it underlines that the UK is a market in which it must return to the top table. It'd be interesting to see how it does that.
Sure. And one thing which has been looming over the UK gambling industry this week is the threat of a huge tax rise. I believe that was addressed on the investor call, Conor.
Yes, that was. Gavin Issacs made a comment about the reports of a potential tax increase for the UK gambling market. And he said that, I quote, until the budget is announced, it's all conjecture. We continue to highlight to the Treasury that a punitive tax increase would have a materially detrimental impact on the economic contribution of the wider industry, putting at risk thousands of jobs, funding for sports and racing, as well as benefiting the black market. So, yeah, we'll all be waiting for when the budget is announced at the end of this month to see what is the direction of travel for the UK gambling industry. But for now, it very much is Gavin Issacs saying that we'll be waiting patiently to see what the government has planned for UK gambling in the new year and beyond.
Yeah, I know in Parliament yesterday, the Culture Secretary, Lisa Nandy, was taking questions on this very issue. And one of her responses was that we shouldn't believe everything we read in the papers, which gives us a problem because the Financial Times says this gambling tax increase is not under consideration, and the Guardian says it's very much under consideration. So it's true, we can't believe everything we read in the papers, only some of it. But we'll see how that pans out in, I think we've just got 2 weeks to wait now for that the autumn statement to come around. So sticking with you, Conor, just let's look a bit further afield and across the Atlantic. BetMGM, it's sort of entering a critical period really with its upgrade and projects there. So could you update us a little bit on how that joint venture is doing and what its new direction is under the new leadership team? at Entain.
Yeah, similar to what Ted said about the UK, this was one where you sometimes had to delve into the investor call to get a few more insights as to what's going on with BetMGM, their joint venture with MGM Resorts International in the US. They said that it's seen encouraging start to the H2, the second half of 2024, after achieving Q3 NGR growth of 18% in constant currency. But as it has been throughout the year for BetMGM in the US, it's still as an investment year in 2024 for the operations there. Looking to improve their marketing and improve their player experience as well. And in essence, that has shown its impact. The market share stabilization for it is around 15%, iGaming standing at 22%, sports betting at 8%. But at the same time, Rob Wood emphasized it's still very much early days, but they are seeing the benefits from the Angstrom capabilities to help drive parlay betting mix and gross gaming revenue hold across the sports of Major League Baseball, basketball, the NFL, and college football as well. So even now with the NFL and college football seasons only just kicking off, with the Major League Baseball approaching their postseason before the end of Q3, with basketball looking to begin their season in the next few weeks, we'll more than likely get to see the full impact of what these Angstrom capabilities are once they publish the Q4 results later this year. But on top of that as well, they mentioned that iGaming revenues for BetMGM were at a record high in Q3. First-time deposits up 70%. Strong online sports to gaming cross-sell in the NFL season to date. Encouraging trends from their single account, single wallet integration in Nevada as well, with strong first-time deposit growth and player engagement continuing upon return to home state there. So it's looking like a good positive direction for BetMGM, and what we kind of like emphasized already at the beginning with the three core markets. US being one of those markets is looking very strong for them. We'll get a better indication, I think, once MGM Resorts releases their Q3 results on the 30th of October. Should get some more information about BetMGM then. But overall, Rob Wood said that BetMGM is gaining momentum in the US markets, and some of the results that they've managed to achieve is an indication of just that.
Sure, it's going to be fascinating long term to see whether they can transform the player acquisition campaign, which seems to be going still pretty well. Market share is good. Can they convert that into a long term profitable business out in the US, where it's extremely difficult for bookmakers to actually make money? So, on a similar sort of scenario, I think. 5 years ago, the excitement was all around the US. Now it's all around Brazil. What sort of what can we expect from Entain in Brazil, do you think, Ted? Once the federal launch of the bets market goes live next year, and why do you think they've managed to get such a positive run up to that big change in Brazil?
This was the area that was most probed by analysts on the City call. They're trying to find out why Entain has such a positive view of the Brazilian market at such an early stage. I think Citigroup asked it to call out its wins in the market, which Rob Wood said revealed it was that he marked 2024 as a year of kind of multi-million-pound investment in Brazil, in which Entain is building towards providing the best kind of localized platforms in terms of deposit, withdrawals, games that attract Brazilian audiences such as Aviator, and improved market pricing over Brazilian sports. The other thing is that in the past 6 months, it's overhauled its leadership team out in Brazil. So it's got a kind of very good talent on the ground making these decisions. The other thing that is factoring in Brazil is that last year, or I think in 2022, Entain acquired its first media acquisition of 365 Scores, and that's now come into the fold. So Rob Wood described that circa 30% of acquisitions of Brazilian players are being directed via 365 Scores, a media platform. So it's getting a much better kind of return on investment on its advertising and marketing. And he definitely thinks that is a weapon to go to market with. Ahead of Bets' launch in 2025, I think that leadership believes that it has the fastest route to ROI in Brazil, regardless of how many operators are in the market. And overall, to its kind of corporate strategy, I think that it's kind of laid the groundwork in Brazil to make its kind of very much in year one, the first statement to market saying, look, we're in the podium place and we've got the best strategy to scale Brazilian sports and Brazilian complexities. I think the new leadership not only views Brazil as a market to grow in, but a market to really make a statement as Entain are on the comeback.
Sure. I mean, I think with the benefit of a little bit of hindsight, not too much yet, the acquisition of that Scores media platform, the live Scores business they've got down there, is a really smart ploy in that market. So
I think what we're seeing in Brazil now, and especially with the M&A plays, is it's not so much just acquiring customers, but acquiring assets. And I think that the play for the operators are what is going to make your product effective, but what is also, I think the makeup of the Brazilian player is going to be fundamentally different to Western Europe and to the US. And I think there's going to be a big emphasis on ROI and who's quickest to return to market, whose strategy works the best out there.
Sure. So let's sort of stick with M&A at the moment and we'll travel a few thousand miles north to Entain CE operation. The Capital Allocation Committee previously, as part of this sort of recovery plan, you might call it, had recommended the sale of Crystalbet, but it now appears they've decided against going through with that. Do we know much about why that is, Conor?
So through their evaluation published in their Q3 report, as you mentioned, the Capital Allocation Committee took a strategic review of Crystalbet, but they came to conclusion to not pursue the sale, as they determined that there was still strong growth in cash generation from the brand, from the sports betting and gaming brand in Georgia. And also the third-party interest did not exceed its valuation to Entain as an attractive part of its global portfolio. So they've decided to keep Crystalbet within its portfolio. They've determined it's more valuable within the group, but they still did mention that they are continuing to assess all assets going forward. And so for now, Crystalbet will remain part of the Entain portfolio. But across their CE operations, they mentioned that NGR rose by 11% pro forma, CC online and retail, both rising by 13 and 2% respectively. Croatia with their Super Sport, they've mentioned that that's performing particularly strongly as well. So it's another good market for Entain, performing well in their CE operations there, Martyn.
Sure. So Ted, they bought a lot. They've acquired a lot of businesses in the last few years, and it's been hasn't always pleased the investors in the business. Do you think there's still scope for some disposals, or is everything looking positive in the markets they're in at the moment?
There's definitely been a kind of change of tone in Entain, and one thing that we're kind of witnessing is that the kind of chips are falling in their favour. So one market that got highlighted was Australia, where Rob Wood noted that Ladbrokes and Ned brands were outperforming the market rivals and maintaining growth ahead of the competition. And it's been a tough kind of 18 months for the Australian markets, a kind of regulatory alignment across states. But Entain actually views the market as very soft, and in which it can take significant market share of retail incumbents. And by that, it means I think it's eyeing kind of tab out there and saying, well, we can definitely take considerable or quick market share from them. Again, it throws kind of another kind of variant into its 2025 strategy about how hard it will pursue out in Australia, but it's definitely an opportunity for them. And again, a market that all of a sudden will come into play for them. It's another kind of positive narrative for them.
Okay, that's one to keep an eye on then. Definitely, that wasn't something I was particularly aware of, so interesting. Right, we've had 20 minutes during which we've had a whirlwind tour of the gambling world, in fact. So just to finish off then, with 1 quarter remaining, and this is quite a binary question of the sort that analysts don't ask on those investor calls. 2024, good year or bad year for Entain, do you think, Conor?
I was thinking about this, and I think it's been a bit of a mixed year, I think, for Entain. They've taken the time with their appointment of a permanent CEO, but they finally named Gavin Issacs, and he's in the role now. And with the Q3 operations looking to be heading in the right direction, from Q3, I should say, it's looking relatively strong, and it's looking like it could end up being a strong finish to the year for Entain. But I suppose the question that will be asked is how will this impact? How will they be impacted? From market changes in 2025 going forward. Particularly in Brazil, will be a big one for them. They've shown that they've got optimism for the remainder of the year. So, they've already mentioned that the group EBITDA is looking to be closer towards the top range of their guidance, close to the 1.09 billion figure that they mentioned within the results. So, it's I would say it's bit of a mixed year in the end for Entain. I know that's probably not the answer that you really want. You want either good year or bad year, but I'm gonna stick with my mixed answer.
Okay, I think Ted is going to get off the fence and give me an answer one way or the other.
I think it really boils down to the plays or how Q4 kind of pans out. What's clear is from the business calls is that the analysts in the cities they're trying to predict, or they're trying to get a clearer picture of where Gavin Issacs will take Entain to. I think refreshingly for Entain, what we've seen is that Issacs is trying to change the narrative of Entain as a company. And also, one of the things I was very clear on was that he's not just prioritizing BetMGM above other brands. He wants Entain to kind of operate as a technology company, prove its kind of product synergies, and leverage growth across all brands and all markets. It's very positive that they're getting a kind of return to UK growth, but overall, it's can Ladbrokes and Coral match the capacity of its rivals in Flutter and Bet365 at the top of the table, and really kind of, bringing that NGR and that EBITDA into Entain. If it captures Brazil, or if it keeps on doing these positive moves in Brazil ahead of its market opening, I think on the share price will go up. I believe, but fundamentally, it just with Entain, it always returns to it's always a company kind of fighting kind of its nature, and I think one of the things is that Issacs has to prove that Entain have moved on and have moved beyond kind of its foundations of just being a company that was founded as an M&A vehicle, and it's now kind of a dynamic PLC that can compete in the disciplines that are valued by investors. It's going to be an interesting 2025 for them.
Okay, that's great. So, nice start for Gavin Issacs then, and we'll see what the next few months have to hold to him if we can keep this positive story around Entain going. And I know that we'll be covering that in quite some depth on SBC News and CasinoBeats in the coming months. Ted, Conor, thanks for joining me today, and listeners, thanks for joining us as well. And tune back in on Monday when there will be another episode of iGaming Daily. Thank you.
Thank you for listening to today's iGaming Daily podcast, supported by Optimove, the #1 CRM marketing solution for the iGaming market. If you want to find out more about some of the subjects raised today, feel free to explore any of the sites in the SBC News network, or check out the latest edition of the SBC Leaders magazine. Happy reading.